The bigger issue that we have is that this tariff talk has completely consumed the oxygen from the bigger story. And the bigger story is inflation. And the inflation predates Trump. So this is not a tariff driven inflation. The PCE numbers on Friday were bad. The January CPI numbers were bad. We're running at a 4% inflation rate. We've seen some signs that, of unanchored inflation, like the Fed would talk about it, that people are looking at the possibilities of ever higher inflation, not just the University of Michigan survey, which might be overstated, but some other measures too. That's why I think if you look at the 10-year yield, we've had a 10% correction in stocks. We've had all this talk about recession and tariffs. We're 425. Last September, when the Fed started cutting rates, the 10-year yield was at 360. Why are we not at least at 360 on the 10-year yield right now, if not lower, today? And the answer is because we've got an inflation problem. And so I think the market will get comfortable with tariffs, but then it's going to go back to the bigger issue that we have, and that the inflation issue never went away. This is not that it reemerged with Trump, is that it never disappeared, despite all of the prognostications from the Fed and all these economists that said we've finally solved the inflation problem. We never did. And we've got a sticky kind of inflation problem at around 3 to 4%. And that's a bigger worry, I think.